Alrighty, guys, welcome back. I wanted to do a little mini series before I get into kind of my next feat that I'm going to go and conquer, which is I get a lot of requests, a lot of questions about, do you cover life, accident, and health? And obviously, I only had a life only license. I only have a life only license. So I'm going to go back and learn all of the life, accident, and health information so that I can make some videos about that. But one thing that I thought would be very helpful is I know my videos are long form and I get so much good feedback about people passing on the first try, which is perfect because that's exactly why I created the channel, right? But I feel like from a consumer of content standpoint, it's very difficult to pay attention to like an hour and a half long video, and you kind of have to break it up and then you forget what you've learned. So what I am going to do before I kind of do that undertaking of like the accident and health information that I don't know anything about yet, I want to try this out and see how these videos do and kind of get y'all's feedback. I want to do some shorter form, just kind of conceptual videos. So what I am doing is going back through Excel now. I'm looking at the New York one just because I'm like over in Jersey now, and someone booked with me the other night to study for New York. And I was like, okay, so I just got that course. And I'm going through it chapter by chapter, and I'm just taking some concepts from each chapter that I think would be good for me to do kind of like a little breakdown video on. So they're going to be really, really short. This one might be a little bit longer because it's the first one. I'm like doing my whole tangent and everything. But yeah, so this will be the first one. It's literally just going to be like insurance and indemnification. Like that's what this is going to be. And then the next one that I will film is going to be about reinsurance. So you kind of see the concept of just taking these key terms, key concepts, and saying, okay, if someone maybe doesn't understand this thing, then I'm going to make a video breaking down just that concept. And then I'm going to, and I like I sat down earlier to just kind of make the video off the cuff and realized like, oh, I don't really have any presentation or anything for anyone to see, which I feel like I talk all the time about people having different learning styles. And I like to have videos that you can like listen to or something that you can see. I like to couple all of that. So and I obviously want to be like hard of hearing friendly. So I want to have something for you guys to look at. So I just sat here and I made some little like literally these are going to be short little presentations about these key concepts. So I'll go through them, explain these concepts, and then at the end, I put in the presentation examples of what a question might look like on your exam that has to do with the concepts that I'm talking about in the video, because I feel like that's probably helpful. I do get a lot of questions of people asking, are these the same questions that are on the exam, or are they phrased the same? Which some of them are like the same. I guess if you're here in California, not all of them. Obviously, these are from like years ago, and these are just practice questions. So they're gonna like change the questions, I think, and filter through. But I want you guys to have an example of what these questions might look like pertaining to the topics that I will discuss in these videos. So I think that's a fun little tangent for my first one. Reminder, you guys can book with me one-on-one if you want some more personalized coaching. And that's where I feel like for those that have sat with me, my number one thing is like, what conceptually are you struggling with? What can I help you with that you are having a hard time grasping? And that's kind of what gave me the idea to do this, is just take each concept that I feel like might give someone an issue, not give someone an issue, but like these are the things that I have noticed from teaching this class and going through, obviously my questions, I have like my book right here. If I was going through the first chapter, because I'm only on chapter one, and I thought, there are questions that are going to come up on someone's test regarding this. That's what I'm going to make a video on. So there are certain things that you might realize if you go through a chapter, you're like, oh, she didn't touch on this. A, they're self-explanatory. I don't think it's anything that's going to give you a super hard time. And B, I wanted to focus on the topics that I had tangible examples of questions to give you guys, because I think that's going to help. And they're going to be shorter, so I think that's going to be helpful too, because one thing that I realized is like, if, when I was studying, if I was struggling with one particular topic, that's what I would look up. And with my videos, there's not really any way for someone to say, I'm having trouble with this thing, and then be able to search my videos and narrow in on just that one topic. So I really want to do this to help you guys be able to say, like, I don't understand reinsurance like at all. Boom. Okay, I'm going to make a video about reinsurance for you guys, and it will have clear examples of what a question about reinsurance might look like. All right, I think I've said the same thing 3 times now. I'm going to get into it because I'm not here to hear myself talk, and I want to keep these short. But yes, you guys can book with me one-on-one. If you do want the help, you can book an hour or 2. The link is like literally everywhere. It'll be in the description box of each of my videos. It's also like linked in the bio of this channel now. So if you need me, you know where to find me. Okay, I'm going to share my screen. I made this little presentation. I'm very proud of it. Okay, very proud of it. I was like, dang, I got that in me. Okay, guys, it's pink because why wouldn't it be? All right, so I wanted to make video number 1 in the Key Concepts series on, of course, insurance and indemnification, because we're starting from the bottom, right? And we're going up. So, okay. Let me make this go away. All right, y'all. Insurance is the transfer of risk through, I don't know what y'all are gonna be able to see on the recording. Okay. The transfer of risk through the pooling or accumulation of funds. So as you guys can see, and as you probably know, you pay a premium to an insurance company for your insurance policy to protect you against loss. So what does that mean? That means I go to a company or, well, an agent, of course, and I say, I'm looking to get life insurance. I want to make sure my family's protected. Worst case scenario, right? They get my application in, I go through underwriting, I get approved, I have this policy, I pay my first premium. Now the contract is executed, there's acceptance there, there was an offer and acceptance there, and I have an insurance policy. If I pass away, my family gets paid out that death benefit, right? So it protects my family against loss, financial loss. Indemnification. So this is, if you've watched my 8-part series, I tell the story about the green marker that I drew on my friend's arm, because indemnification, I say, is basically just the definition like of insurance. So it's to restore insureds to the financial position that they were in before the loss occurred. So if you think about it from a car insurance perspective, what does your car insurance do, or how does it work? You pay for your car insurance policy, and if you get in car accidents like I have in the past, you call up your insurance company and you say, I crashed my car, can you fix it for me? And then they send an adjuster out and they say, this is how much damage there is, and we'll cut you a check, we'll get it fixed or whatever, right? And then they restore you to the position that you were in before that loss occurred. So whether that is writing you a check for the repairs to be done to fix your car and put it back into the place that it was prior to that accident, or if the car is a total loss, they'll cut you a check so that you can go and buy a new car. Basically, like, they'll pay you the amount of the car, what the car is worth, to restore your financial position to back before the loss occurred, before the accident. Okay, so that is that. I always say, like, if you don't understand indemnification, that's like the definition of insurance. So passing your insurance exam is going to be pretty hard. That's why I wrote indemnification on my I wrote indemnify like on my friend's arm in green marker because he couldn't remember it. And I was like, you can't forget, like, you can't not know this. You can't forget it. I'm writing it on your arm. And he said, he was like, yeah, it helped me. I'll never forget like having this green marker on my arm. And I was like, it's my methods, right? Um, okay, life insurance also creates an immediate estate regardless of when the death occurs. Estate meaning there is funds available when you pass away, right? So your estate, in I guess layman's terms, the easiest way for me to describe an estate is essentially just what you own. Your car is in your estate, your house is in your estate, um, all of your money, bank accounts, all that stuff is part of your estate, right? So if you're someone who doesn't have a ton of assets or, own anything that can necessarily help your family out financially upon your death, if you have debts or just rent to be paid. There are things that you pay for during your life. Like if you have children, obviously you're taking care of them. If you were to pass away and that income is gone, how are your children going to be provided for after you pass away, right? So that's essentially what life insurance does. It creates an estate upon your passing, and it doesn't matter when that death occurs. When you pass, there's money available. So this gives your family, your beneficiaries, the ability to cover your funeral expenses, of course. There was a story, my old company would do like Friday night trainings, and different agents would like kind of guest host and tell stories of their experience out in the field. And one ended up telling the story of her father. She got her father covered when she got into the industry. He supported her, got a policy with her. And guys, craziest thing, I want to say, if I'm like remembering correctly, or probably like ad-libbing a little bit, but she said he signed his policy and funded it and everything was good. Like it went into force on August like 16th, and he passed away the next day and it paid out. And she said when she went to the funeral home, the funeral home director said, "We love families like you." And she's like, "What do you mean families like us?" And she was all offended. And he said, families that don't have to choose the cheapest flowers or not to do flowers, or, can't do a headstone for a couple years because they can't afford it and have to kind of skimp out and bury their loved one, you know, as cheap as possible. Isn't there like a episode of Shameless where she's trying to figure out how cheap she can cremate whoever for? I don't know. I saw it like on TikTok. But this allows your beneficiaries really to have the means to bury you with respect and um, that kind of last celebration of life that you deserve. It also helps them to pay off debts, and it gives financial peace of mind. Like I said, when you are alive and you have a family and you're providing for your family, when you pass away, that money is no longer there. That income is no longer coming in. So how is your family going to be comfortable knowing that they'll be provided for? Well, this life insurance does it for you, right? Creates that estate. Now there's money available to not only take care of the immediate expenses with, paying off debts and obviously paying for the funeral, but it gives them that financial peace of mind to know the bills will be paid moving forward. Parties to an insurance contract. This is important. I've talked about this before. There are 4 parties to an insurance contract, and this is me being like super literal, but in any insurance contract, obviously you're going to have the insurer, which is the insurance company, the company doing the insuring, the insurer, the owner of the contract, which is not always the same as the insured. So whoever owns and is the payer of the contract, and then the thing or the person being insured, and then the beneficiary that benefits from that policy. Now, sometimes the owner and the insured are the same. Sometimes the owner and the beneficiary are the same. So like, for example, I myself have insurance policies. I have 3 insurance policies on myself where I'm the owner and the insured. And then obviously I've got different beneficiaries, but let's say I'm married and I decide to take an insurance policy out on my husband. So I'm the owner, he's the insured, and then I can be the beneficiary so that when he passes away, I collect the funds on that death. I don't mean that in like a shady way. I'm just saying, there's still gonna be bills to pay after he's gone. So there's insurable interest there. So I can get a policy on my husband that I'm the beneficiary of. That way, when he passes away, I can pay for the funeral, I can pay the house off, this, that, and the other thing. So does that make sense? There's four parties. Sometimes owner and insured are the same. Sometimes like owner and beneficiary are the same. Obviously, insured and beneficiary will not ever be the same. Okay. And then here are some sample questions for y'all. Which of the following is a contract that involves one party which indemnifies another when a loss arises from an unknown event? And obviously that is insurance contract, which is why I say like indemnification, indemnify, all that stuff. That's basically like the definition of insurance in my eyes. It's funny because when you see this question on the test, it'll say like insurance contract or like indemnification agreement. And obviously when you see indemnifies, you're like, oh, indemnification agreement sounds right. No, it's literally just an insurance contract. This is a very cheeky way for the Department of Insurance to be like, do you actually know what you're doing? Like, do you actually know? We're going to ask you in the most complicated way. Like, basically, what is insurance? And that's what this question is. Sneaky, sneaky. Life insurance creates an immediate estate. This phrase means when the insured dies, a death benefit is paid, thus creating the estate with that, like the funds, with basically the assets to take care of everything that needs to be taken care of. And finally, which of the following statements correctly describes a contract of indemnity? One party is restored to the same financial position the party was in before the loss occurred. So if you see, I almost kind of feel like in this video, I'm just saying the same thing over and over again, but I'm just kind of saying everything backwards. But these are a couple examples of where these concepts will show up on your exam and kind of roughly what it might look like when they do. And I hope that was very helpful. If it was helpful, give me some positive feedback, please, and let me know that doing these kind of like shorter form key concept videos is very helpful to you guys. And also let me know, obviously, like I'm going to go through all the chapters myself and pick out what I think shows up enough to need to really be like put in its own video. But if there's like a concept that you guys are struggling with, also let me know. And again, if you want me to help you kind of zero in on some concepts that you might be having trouble with, you can book me and the link is below. Okay, that is it, Finn. That was video number 1 in the Key Concepts series, and I'll be back with video number 2 in just a minute. Bye.